Okay, what's good YouTube? This is your boy the W Trader back again with another valuable video for you. I know I've not been releasing a lot of content lately. I've taken a break because I needed some time off. The boy needed some time off to take some time to think about the future. My mental state also wasn't on the right. I wasn't on the right mental state to be releasing content, so I decided to just take some time, focus on myself psychology wise, and just take a little bit of time for myself. So without any further ado, this video is going to be simple, brief, and straight to the point. We're going to be taking analysis. We're going to be doing a monthly analysis. I'm going to show you quickly how to analyze the financial markets or the forex market like a pro. So I'm going to show you quickly how to do the financial markets, how to analyze them. But mostly, remember, I have a course, uh, Smart Money Concepts, easiest way to trade smart money concepts. I'm going to be showing you how to analyze a chart like this chart like a smart money concept pro, right? So what I'm going to do here is I'm going to take a look at two of the pairs that I have decided to focus on currently. I'm only trading these two pairs, that is GBP USD and Euro USD, and this kind of trading has provided me with about setups almost each and every day. I have it set up almost every day, to be honest with you. I don't want to lie, right? Now, first concept that you already know you have to respect is liquidity, right? So we can all see that what we had here is what is called a double top. Now, what we know as smart money concept traders is double tops are one of the most filled with liquidity areas. So this area is a double top. We knew way before price came back here that the market is most likely to run through this area than for it to respect it as a triple top. Now, I know a lot of people who would have expected that if we're coming back here, we're going to just tap into this and go, because some people will be using it as a resistance. But look at what has happened. The market broke to the upside. Now, most traders will then say, okay, resistance is now broken, it's now support. The market breaks back to the downside again. So it did not respect it as resistance, and it did not respect it as support. There's a reason why the market did that. The market is grabbing both buy side liquidity and sell side liquidity. I've received a lot of comments recently about my audio, the audio of my videos. I hope this video is going to be audible. I took some changes to try and better the sound quality. I hope it helps a little bit. I'm not sure if it will work, but comment down below if the sound is better than the previous videos, and comment down below if you like the video. Like, comment, share, subscribe, do all that good stuff. And let's continue with our analysis, right? So what I usually do is when I go to the daily chart, because I'm looking for trades that I'm going to execute this week. I'm not looking for trades that I'm going to hold for months and things like that, right? So what I do is I try to go to the daily chart and depict and pick, actually I almost used the wrong word there, and pick my order flow. So what I see is we are in bullish order flow, higher high, higher lows, forming a series of higher highs and higher lows. Higher low here, this was the higher high. So now I know the range that you're trading within. You're trading within this range. I hope it's easier for you to see. Also, this low forming this high because it broke this, so it becomes higher high, higher low, higher high there, higher low here, higher high here, higher low this wick. Now we've created this high and we're trading within this range for me personally after this break of structure here. So we know that we have an order block that's sitting within this wick. So as the market continues going down, we know we are looking for continuations for us to go to the upside. So now you know what we are looking for. We're having bullish order flow on the daily chart. I'm having bullish order flow on the daily. I'm looking for potential moves to the upside. So I'm going to go quickly to the 4-hour to kind of show you. Let me mark this already here. I'm using the wrong thing, but I'll fix it just now. Just marking the current daily range, because that's one important thing. The daily range, I believe the daily range is going to be what determines the position that the trade that I take during the week. I might have 2 or 3 trades inside this range and I still wouldn't mind, right? Let's go to the 4-hour and allow me to show you exactly what it is I'm looking at. So currently we already have our range. I'm going to change this into what I usually use, which is the line. I use the dotted one for liquidity, to spot liquidity. So we have this area here, then we have that as the high of the range, and then we have this here as the low of our range. So what we see here Essentially, it's nothing difficult, nothing complicated. What we see here is very simple, straightforward. Is we had a break of structure to the upside. So in where here do we have our low? The low that gave us the move that broke is here. This is your order block, right? This is the first order block that you would have been looking at. But clearly the market grabbed liquidity to the low, grabbed liquidity below this order block. So most likely the market is going to respect maybe this OB. This is the extreme order block that I was talking about that wick when I was mentioning the wick on the daily chart. So if price continue to the downside this coming week, it would not be anything that surprises me if price continued to the downside trickling, especially with the fact that Monday is going to be a very slow day because it's a holiday. It's Easter Monday, I believe. So Monday is going to be a very slow day. But of course, again, generally Mondays are always slow days on the markets. So if price moves slowly to tomorrow, we may find ourselves in a buy on a Tuesday or a Wednesday to the upside. I'm looking for buys. I'm interested a lot on buys. If I was somebody who's going to trade on Monday, but I don't trade on holidays, so I'm not looking to trade on Monday. If I was looking to trade, I'd look for sales, most likely for sales, right? So I'm looking for buys at this area. This is my area for me to buy. There you are. Very simple way to analyze. I stick to the extreme points, I stick to higher time frames, and this is easy. Smart money concepts, the easiest way to trade smart money concepts. Just stick to the extreme order block. Order blocks are always going to be there. You can have more than one order block, but just try to stick to the extreme one, the one that's very extreme. That's the one that I want you to stick to. Now the order block here, because this would have been your OB, but this is also part of the order block, right? Because this is actually the low that gave you the takeout. But I'm going to go to the 1 hour. Let me show you quickly. We're going to identify order flow again, because now that the market has closed below, excuse that, now that the market it didn't close below but has worked below it, probability of this actually working out for us to go higher is way less, excuse me, than the probability of this actually coming down. So I'm looking at potential for price to actually grab this as liquidity, this low here that is created as liquidity. Now I'm going to show you something else also that I do is once I go to a lower time frame, this is what I would have focused on when I'm looking at the 4 hour and on the daily. But when I go to the 1 hour, what do I want to focus on? I want to focus on the order flow here, which is minor order flow. 1 hour and the 15, this is what I want to focus on. And I can show you that we have this low, this high here with an order block that gets mitigated. We break to the downside, creating a low, leaving a high there. The high gets mitigated by this because you would have had to have this in. So it gets mitigated there, taken out, leaves this as the order block. Is this taken out? I believe this has been taken out. So if you're trying to find yourself in a sell, you can use this OB. You have most likely a lot of order blocks. You have this order block, you have this one also here, or you can just stick to this one that got mitigated here. You see, so if you are looking to take sells, you can still take sells. I'm not saying so. The only reason why I wouldn't take a sell is because it's most likely going to happen tomorrow, which is a Monday. It's most likely going to happen on a Monday, and I'm not looking to trade on a Monday. I'm not looking to trade on a Monday, not because I don't trade Mondays, but mostly because this Monday is going to be a holiday, and I don't like trading on holidays. The market is going to be open, yes, but price is not going to be moving, you know, efficiently. It's going to be moving very slow with small candlesticks, and I don't think it's worth it. And the spreads are not going to be nice on my FOREX funds because I'm currently trading in my FOREX funds account. So this for me, I would say it's a break. It's a break of structure here. So because I classify that as a break of structure, I would say, you know, you can look at this price to come into that and go, or you can look at this one, price to come into this and go, or price to come into the extreme one here and go. Those are the three order blocks that you can focus on if you're trying to sell currently. But I'm not really interested in selling. I'm not interested in selling. It can sell. If this was happening on a Wednesday, I would take the sells. But because it's happening now, and it's mostly the reason why I'm making the decision not to sell is because of news, right? So because it's going to be news, I'm not going to be interested in that. I'm going to allow this to come and grab the liquidity, come here, and then you can start buying as price begins to move to the upside. I hope this makes sense. This is the easiest way to trade, and this is the easiest way to analyze, right? Your order block was definitely this area. This was definitely order block. But I do not like what happened here. What happened here is something that does not make me happy. So this is expectational order flow. Does not mean, again, this is not 100% what's going to happen. Does not mean the market cannot do this. Once the market does this, I can start looking for buys there, because it would mean to me that this actually held and this is just a liquidity grab, and there's absolutely nothing wrong with that. Now, after analyzing like this, what do I usually do? I then try to identify or build a case for my sells or my buys, and what I see here is a case for my buys because of this trendline liquidity that the market at some point will have to take, because this is a trend line, and also the impulse correction theory that the nature of the market. Impulse correction, we have to impulse again. We can either come all the way back here to then impulse, or we can impulse now. There's absolutely nothing wrong with that. But with that aligning, I then have more confluence for me to look for long-term buys than for long-term sells. Now, one other thing that I showed you at the beginning of the video is I was showing you that there's also a higher time frame double top that we just took out most recently. So this is most likely to continue higher than for it to come down. So I'm very interested in seeing what happens at this area. Once we close below here, I'll just wait and look for my buys, because that's what I'm interested in. I'm interested in actually taking this to the upside and enjoying a young 1 to 6, but most likely, because the minimum I go for is a 1 to 10, so most likely I'll go for a 1 to 10 or something like that, and that's what I won't mind. So that is what I'm looking at in terms of GBP USD. We can go to the next pair, which is going to be Euro USD. These are the only two pairs that I look at currently. So that's the only two pairs that I have been trading over the past, since the past month. I've been trading only Euro USD and GBP USD. Now I know a lot of people would say, why would you stick to two pairs that are positively correlated? If one thing about me is I've never allowed myself to trade a pair only because it's correlated to another pair. I wouldn't take a sell on Euro USD just because I saw GBP USD selling, but rather I would want Euro USD to show me a reason that it's going to sell just like Euro USD. So I'm trading each and every pair based on its own merits, which means I'm giving each and every pair uh, the benefit of the doubt until it shows me otherwise. So when it comes to this pair though, we have this high, very important high. I believe the market the price will either try to get a reaction from here or actually take this area out, because a lot of people are looking for price to come there, to come into this area and then go to the downside collapse, right? So I'm interested in seeing what happens there, but since we are not yet there, I'm going to focus on what's currently happening. This is the daily chart again. We are trying to identify order flow, right? Breaker structure, we came back to mitigate, so that's higher high, higher low right there. High created, low created, we break structures, we go there. High created, low created, break structure, high created, and low created. So currently you're trading within this range. Boom, easy. We've identified the current range. That's what I use the daily chart for, to identify current range, because I do not want to find myself not knowing where I am trading at, because the range is very important, right? This is the current range for me. This is the current low that's being protected or respected. This is the current low, current high right there. It's very simple trading smart money concept. Do not make it too difficult. Don't complicate it. Just make it simple. Stick to the basics, and then just try to to use the basics on each and every time frame, understanding that price action is going to be visible on both the time frames. You need to understand and see the break of structures on the 4 hour the same way you saw them on the daily. Then go to the 1 hour, go to the 15 for entries, go to the 5 minute or the 1 minute, confirmations if you want to use confirmations. So this is what I'm looking at. I'm looking, this is a break of structure to the upside. As you can see, we closed above. Now we're coming back So according to the daily, my order block would be somewhere here. My order block would be lying somewhere around this, somewhere inside this wick. I'll show you why I'm saying that once I go to the lower time frame, because again, the order block is the last point where we were selling in terms of a bullish market. So easy, you see, where's my order block? Now I can refine the OB. Is here. This is the order block. Now the reason why I trust this trade way more than the previous one for buys is because of a liquidity grab. That's another concept that I like to use, right? When you have a liquidity grab, you have high created a low here, expecting price to come back into this to respect it to go, but price breaks, so it becomes a young break of structure. It becomes a young change of character, but then price actually breaks to the upside again. So which means this was just price grabbing liquidity to get people to think it's now starting to become a bearish order flow, and then it continues with the bullish order flow. So because it got people to believe it's bearish, a lot of people were taking sells at this area, this order block. But this is only just a liquidity grab, right? So because there's a liquidity grab, order blocks that lie at liquidity grabs are more likely to actually give you the move than those that just lie anywhere else. I hope I'm making at least a little bit of sense. I hope what I said makes sense. So I'm going to continue again. If you're still watching the video at this moment, it means you're enjoying the kind of content that I'm bringing out. So go ahead, like, comment, share, subscribe. Leave me a good comment down below, like, so that a lot of people can be shown this video, so that YouTube can, help put out the video, help lace more people with free forex information. Because again, a lot of people are selling this kind of content and it's not worth it, because it's just free information that you can find on either YouTube and all those other platforms. On YouTube, you can find it on YouTube, you can find it on Twitter. This is free, easy, smart money concepts, and then we just go ahead and do it over and over again, because again, you're going to be perfect. You're going to be one of the best traders from only you doing the basic things that you don't have to, overdo. You don't over apply yourselves, because you cannot over apply yourself each and every week. Sometimes you're not going to apply yourself enough, and that is going to end up being a psychological hurdle for you to cross. So the best thing is do the basics, the simple things, more and more, as more often as you can, so that even when you're not feeling well, you'll still be able to apply the basic simple things. Do simple things so much that it becomes second nature to you. That's what you want trading to be. It has to become second nature, something that you're not forcing for you to do. Excuse me while I take a sip of H2O, one of the most important liquids on earth. Okay, let's continue with Euro USD analysis. So we have that break of structure to the upside. We have a young low that's created on a lower time frame that the market pierced below. So a lot of people were respecting that. This was also actually something that one could have used as an OB, but we can already see it's not going to hold. It's not an order block that's going to hold, because you see prices created liquidity and prices to grab this liquidity. Prices created liquidity at this low right there with a potential support. Because if I was trading support and resistance like all or most retail traders, I would have a box here saying this is my support, and if price pulls back into it, I'm looking for buys, which I guess when you're beginning when you are a beginner trader, it makes sense. But the more you evolve with trading wise, you start to realize, or you begin to realize, that that was just a hoax, and it was a waste of your time, because you could have learned so many more things with institutional trading than you have learned with retail trading. But the thing is, when you're beginning forex trading, you're looking for the simplest ways to make money. But again, once you lose yourself to this process, you're going to make a lot of money. Lose yourself to the process and forget about the potential gains or the benefits, right? So we have a support level here that price has to take out. Order flow on the 1 hour, I would say for now it is not yet showing, but I know price is going to take out this area, because for me it's an area of liquidity. So I'm going to go ahead and mark it. This is an area of liquidity for me. Now when it's liquidity, what I do is I go boom, and then I change this, make it a dashed line to show that that's the liquid area. So I'm looking for price to take liquidity, most likely allow price to go close below, so that it can have a break of structure for for the order flow, retest that to mitigate, and then come lower. This is my anticipation, so that we can then be able to buy to the upside. So I'm interested in buys. Whatever happens tomorrow, I do not care. I'm not even going to be looking at price much as far as tomorrow is concerned. I'll look at it again. I'll analyze price again on Monday, same time tomorrow. I'll say same time tomorrow because tomorrow is Monday. Monday around that 10-11 area before the new day begins. That's what I'm going to be looking for. This for me is liquidity. That's break of structure. What you can see on the daily though is we have a young build up of bearish order flow there, but I don't think it's worth it. Once we break this low, I can then say, okay, bearish order flow confirmed. And then if I'm looking for sales on Tuesday, I may take sales. But as far as now is concerned, I'm only interested in taking price to the upside than taking price to the downside. I'm interested in buying than selling, because buys are with the overall or long-term perspectives. Therefore, that kind of helps my case, because that's the best way to do it. Always make sure you are aligned with higher time frame order flow. I hope this video has made at least small sense, and it has triggered at least triggers a reaction from you to start taking your forex trading seriously. And make sure you do this each and every day. I'm going to be releasing such videos almost each and every day, because I'm going to try and make them short. I'm going to give you an update tomorrow. I'm going to give you an update on Tuesday, an update on Wednesday, Thursday, Friday. I'm going to see your reaction from it, and if you like the kind of videos that I bring out, make sure you comment down below, like, comment, share, subscribe, do all the good stuff. Subscribe to my YouTube channel. We're on a road to 500k, to five, not 500k. Oh, I'm too forward. I'm too forward. We're on our road to 500 subscribers. We're currently at 340 last time I checked. So let's get to 500 subscribers right away. The course is there. The Discord server is there. Everything will be in the description down below if you're interested in joining. Everything's totally free. I'm going to give you a free forex course on smart money concepts. Why are you hesitating? Free trade ideas, which is essentially what you call trade signal, what your gurus call trade signals.